But gentlemen, I think we need to start off with the big story, and that is the 4 Bitcoin ETFs that are supposedly getting approved. They're not Bitcoin ETFs, they're Bitcoin futures ETF. There are conflicting opinions in the market. So some people say that it's a great thing for Bitcoin. There are other articles that are saying it could be negative for Bitcoin. What are we thinking, Mark?
Look, I struggle with this. So this little run here and the little pre-announcement by the SEC feels a lot like the pump right before the El Salvador, adoption as legal tender. We're super overbought, and that usually is a kind of buy the rumor, sell the news. The problem with futures in any commodity is it allows you to create paper goods instead of physical goods. So if you look at, there have been massive spikes in oil in the past driven by futures, and that leads to bad outcomes in the short run. So I don't love futures. They have a roll yield problem. You don't get full exposure. So generally speaking, I really wish they'd approve a physical ETF, but this is something. At least it'll give people a chance to buy more.
Raoul, is this market running because of the futures news, or is this just a natural Bitcoin run?
I've been talking about this for most of the year. We kind of knew it was going to happen now. So this is not unexpected news. It was coming. We are in the teeth of the best part of the entire cycle. The price is going to go up regardless. We threw all the FUD at it over the summer. That was the correct 50% correction. Basically, the market's been trading sideways in a volatile range since March for Bitcoin and May for the rest of the market, Ethereum. If you look at all of the post-halving cycles, this quarter is where all the gains are made. I cannot stress that enough, that this is the time. It's I keep adding to my risk. Every penny that I get in just goes into this. I'm buying call options now, which I haven't done before, because before we didn't have to get options right, you need to understand time horizon. But when you're in this kind of 3 to 6 month phase, you kind of can nail the time horizon. So options become really good ways of getting leverage without much risk.
Right.
So I'm feeling that everybody's calling for a repeat of 2017. You have the market which went down in September of 2017, and then went parabolic in the following couple of months. It happened in 2013. And everyone's kind of calling the same kind of market now. It feels exactly the same. For those of us, Yoni, I remember you were there in 2017. It feels exactly the same. It's just like watching
very similar charts to 2017. We had a peak in I think May, June, and then sort of a small winter, maybe an autumn, where people actually, there was FUD coming out of China. Exactly like very similar about bans of the exchanges in China in summer 17, and people were wondering whether it's going to kill Bitcoin. There was a big discussion on Bitcoin is dead because of this, and then November, December came in. We just hope, by the way, that history doesn't exactly repeat itself, because we are now in the longest crypto rally in crypto history. By far longer than the crypto rally of 2017, which just lasted 2 months. And, sometimes a healthier rally means a lesser of a correction.
So if this is the chart of 2017, and I keep going at it. September, we had a down month. It started to recover in October, and it kind of feels like we're going to get this parabolic bull run. But then you've got, if you look at the time frame, it started on the 1st of October, and by the end of December, or the 17th of December, which was 2 months later, the whole thing started to collapse. Are we expecting the same kind of up?
So I think it's different. I think it's going to extend further because we've got new players into the market and they operate differently. So firstly, we've got the ETF. I think we'll get an Ethereum ETF as well. So that's continued news flow. We've also got the ETH 2.0 and the amount of staking that's going on and what that does. That's going to probably lead to a buy the rumor, sell the fact. And I think it's going to be very powerful because, if you have the ETF and this ridiculous shortage of ETH that's going on, you've got something pretty powerful. But the big factor that people need to think about is how institutions asset allocate. It's quarterly and it's annual. So we will see this bull run. Everybody who hasn't yet invested or wants to increase their weightings, that will come in Jan. And generally, everyone with new shiny P&L, the hedge funds too, allocate. So I think that gives Jan, Feb and March much more potential. And it could go in as far as June before, you know, there'll be excess speculation and the usual thing. It will kind of collapse under its own weight for a while, and regulation may be the thing that gets the market scared. But I think it extends further in price and time than people expect.
So your view is the same as Plan B's view, where, you know, he says that, you know, he takes the lines after the halving, and, you know, the turquoise line, which is on the screen now, is the first halving, the months after the first halving. And you can see that after every halving on his stock to flow model, you get a run. You get a run. You can see that the first halving, which was the light blue, lasted much less than the dark blue, which seems to be that we're having a much longer.
That's a function of adoption. So the more participants in the market, the broader and longer this plays out. So it's kind of a function of network adoption and the kind of Metcalfe's law idea. So it makes total sense that the price is less spiky, but the trends are longer.
Ifs, in essence, are a long-term play. We should think about sort of GBTC and probably retail investors and institutional investors who want long exposure to Bitcoin but don't want to handle the keys and the coins to buy ETFs. ETFs, if you look, you know, everything Spider, etc., it's very long oriented to accumulate assets. Where I 100% agree on futures. In 2017, I said this introduces short into the system. Institutional short, when back then in 2017, the sentiment was very negative in institutions. Every single institutional investor we spoke to back in 2017 were actually naturally short crypto, thinking this is, as Jamie Dimon back then said, or maybe Warren Buffett, rat poison or something toxic. I think now we are seeing digital assets research coming from all of the big banks. We're seeing large institutional investors that are long only, real, you know, $1 trillion, 100 billion, you know, in the range of $100 billion to $1 trillion and more of assets starting to allocate into crypto. And I do think that creates a new floor for crypto. But the real value, I think, eventually is coming from, you know, the very simple concept of scarcity. Ron, I know, loves billionaires, but there are 55 million millionaires. 55 million millionaires, and only 500,000 could ever join the 42 Bitcoin club, because only 500,000 people to the rest of the future will ever be able to be what I consider millionaire in Bitcoin prices, which is having 42 Bitcoins. So and I think that element, you know, as we go further through both the, you know, the rabbit hole now of DeFi, NFTs, etc., and suddenly I have more and more friends accumulating stats. I have more and more younger people in their 20s. Yep. Accumulating stats, and I think that is the essence of the future of the price of Bitcoin. And institutional money is creating for us the floor of that range.
There's going to be something interesting as well, because institutions, again, the market's not used to this. They rebalance their portfolios. Now, if we're all right and we have this big final quarter run, December at some point there's going to be quite a big sell-off as everybody rebalances.
Raoul's right. The predilection to rebalance is real in institutions, but it's also real in individuals. One of the reasons we see this seasonal activity, this seasonal pattern in Bitcoin, is because of tax season and Chinese New Year. Now, Chinese New Year might not be as dramatic this year because they made it illegal to do crypto transactions, but the tax season in the US is going to be a monster next year, right? I mean, we're up 45% in the last 4 weeks. That creates capital gains. There's a lot of people who are afraid that the administration is going to raise capital gains rates. They will push those sales into this calendar year. So I actually agree with Raoul that there could be a meaningful meaningful correction.
And this is going to make this really hard, because here's these two schools of thought. It tops in December or it tops later. And December is going to be a period where you're not going to know. And there's going to be a bunch of people freak out and say this is the end of the cycle. They might be right. Or it may, what I think was happen is then Jan, Feb, it just explodes higher again as all this new capital comes in. So it's going to be a really tricky period psychologically to deal with, because people are sitting on gains and people want to, you know, buy some real life stuff.
Raoul, you don't think that Bitcoin's overbought at the moment?
Can I share it? Am I able to share a chart?
Yeah, share your screen. There's a screen share at the bottom. Yoni, you were going to say something while Raoul shares his screen.
Yeah, I think we're also talking very short, medium term. This dial. I think, you know, long term. I'll be surprised if anyone here doesn't think that Bitcoin 2025 is significantly higher in its price to where it is today. And 2030 is even higher, just from, again, because we all understand purchasing power, we all understand inflation, we all understand printing money increases inflation. This is now a global phenomena. So the target of digital gold, of Bitcoin, getting to physical gold size and market cap is reasonable. Now the question is whether it takes 3, 5, 10 years, doesn't really matter if what you are is a long-term holder. I would generally say that for people who are interested in Bitcoin as an asset class, as a hedge against inflation, don't try to time the market. Trying to time the market
totally agree.
In Bitcoin
dollar cost average
is bad, and every person in the last, you know, since I got here in 2011, I tried at the beginning. Because of that, I have less Bitcoin than I should have had. Because you try to time the market, you sell at the wrong time, then you're afraid to buy at the right time. You want to accumulate stats. You want to accumulate Bitcoin over time. It's not that it's not interesting. There are trades.
So, Raoul, you wanted to show us a chart.
Yeah, I want to show you two charts. And this, I've been using this for over a year, and it's been pure magic. This is Bitcoin versus the 2012-2013 cycle. And it gives us, you know, a pretty clear target, and it's been magic. I mean, it gave me the strength through the bear market to keep adding, thinking we know how this plays out. And I'm going to also show you the Ethereum version of this. Let's just see if I can find it.
That's what I mean. That's what I've been saying. It feels like we're watching a movie. It feels like we've seen this all before. I'm watching 2021, and I remember 2017, and I feel like I'm in 2017 to the day.
And so here's Ethereum versus Bitcoin in 2017. It's been pretty damn good. In fact, I've got this as a real-time chart on my Bloomberg, and it almost works to the day right now. It's so close. And that gives us upside to about 20,000.